Today we'll be talking about how your standard deduction can lower your tax bracket. My name is Daniel Passon. I'm one of the consultants here at Robert Hall & Associates, and welcome to our video. Please like, subscribe, and set that notification bell for any future videos we may post so you can be notified when they are available so you can learn more information on tax topics. So we'll be talking about how the standard deduction can lower your tax bracket. We'll be discussing first what the standard deduction is. What is it? Next, we'll be talking about how it affects your taxable income and your tax bracket. And next, we'll be talking about what other options you have regarding your standard deduction, such as your itemized deductions. So your standard deduction. What is the standard deduction? The standard deduction is an amount that every person who files a tax return, every resident who files a tax return receives as a deduction off of their income that they're making. The typical amounts are about a little less than $14,000 for a single person, about $28,000 for a married person, basically twice the standard deduction for a single person, and the 50% range, about $20,000 or so for the head of household. These are very estimate amounts because they change year over year, but you can find them online pretty easily. Now, the standard deduction, once again, is an amount that just no matter what you do, you receive basically as a deduction. Now, there's different little nuances if you have only investment income or if you're claimed or things like that. But for sake of this is for just the standard employee or person who's trying to file their taxes on their own. And they are either single or married or head of household. And these are the amounts that they receive just as a governmental amount. So as a standard deduction, if you're a single person, you give $10,000 to charity, that's below the standard deduction. So you take the standard deduction of $14,000. If you have a mortgage of $10,000 and that's all you have, well, maybe you get the standard deduction once again because you are given this amount no matter what you have as other deductions. Standard deduction is just a standard amount that the government gives you. Next, we'll talk about how it affects your taxable income or your tax bracket. Now, if you have, let's just say, $100,000 a year of income, you can then take your standard deduction off that amount. So you have, say, if you're a single person at $14,000 approximate standard deduction amount, that'll come off your $100,000. So now you have $86,000 of taxable income. So the standard deduction is something that does help your taxes. You get to lower your tax or your adjusted gross income by your standard deduction to lower your taxable income. Thus, you're taxed on your taxable income, not on your total income of $100,000. This is how your standard deduction can lower your tax bracket / your taxable income because it is lowering your income effectively. Now, options. I did discuss originally about how you might have, say, $10,000 of charity that you do, or $5,000 of mortgage interest, or maybe you have $5,000 of property taxes. These are all different potential itemized deductions. You get to take the greater of your itemized deduction or your standard deduction as your amount. Because as an example, if you only have $5,000 of charity, why wouldn't you take the $14,000 the government gives you? If you only have $5,000 of property taxes, why wouldn't you use the $14,000 the government gives you? You're able to take the greater of the two. So I would want to pay less taxes. What about you? Let's take the larger of those two numbers, which would in those scenarios be the standard deduction. But if let's just say you have $10,000 of property taxes and $10,000 of mortgage interest, and you're a single person, well, now you're at $20,000. You could take that itemized deduction amount, which is greater than the standard deduction amount, and that itemized deduction will now lower your income and effectively help your taxable income and your tax bracket be lower because you're using the greater of the two. So that is an area where, as much as the standard deduction is beneficial and helps you, if you're able to itemize, that is definitely better because it allows you to pay less tax because you're at a lower taxable income. That is the basics of how you have your standard deduction, which will help you, and how you can get your itemized deduction to help your better situation in taxes. Hopefully this all made sense about how the standard deduction can lower your taxable income and your tax bracket, and how itemized deductions, although this focus of the video is about the standard deduction, how itemized deductions would be more beneficial if possible to lower your taxes and your taxable income. And please don't forget to like and subscribe to these videos, and hopefully the standard deduction and how it affects your taxable income and your tax bracket was helpful for you today. Please reach out to our office if you have any further questions at Robert Hall & Associates. And this is an area where having a tax advisor or having someone that can assist you with your taxes can definitely be beneficial, because maybe you're taking the standard deduction, which is fine, but potentially you can get the standard deduction higher by having these itemized deductions. Maybe there's things that you didn't necessarily think about, potential job expenses, potential charity that you didn't do, or that you didn't realize was deductible, or other taxes that maybe can help lower your taxable income, because maybe you can itemize and hire someone to assist you with that process versus taking the standard deduction. Hopefully this all made sense today, and we look forward to seeing you in the future.